Here's an ET Now exclusive. Are you an HNI looking to make new tax-free investments? You could soon do that as an angel investor in startups. The government is looking to start accrediting investors that would be exempt from paying angel tax, even if the investment is above the current threshold of 25 crores. How will it work? What's the likely cutoff for being eligible for not paying angel tax? Let's go across to Parisha for all the details.
If a Tata or an Ambani wants to make tax-free investment into startups, that could be a reality very soon, as the DPIIT is working on a plan to come up with a category of accredited investors which will be allowed to make tax-free investments into startups beyond any limit. Remember, so far the government only allows listed companies to make tax-free investments in startups over the threshold of 25 crore, but these accredited investors will be allowed to make any amount of investment without there being an upper cap. This was decided in a meeting which held last week, and the proposal was that the accredited investors should have a minimum annual turnover of 50 lakh rupees and a net worth of 25 crore rupees. This will not only tax-free investments by individuals and unlisted companies, but would also mean huge amount of capital inflows into startup ecosystem. The government is planning to go forward with this plan as soon as possible, and what we gather from sources is that this could be announced in the upcoming full budget.
Thanks for the details, Parisha. Meanwhile, DPIIT Secretary Ramesh Abhishek did confirm that they are deliberating bringing in the concept of accredited investors. Listen in.
See, idea is that investments into startups should be easy and should not be subject to provisions of 56 to 7B. For that, we have already made some carve-outs. Investments up to 25 crores are exempted completely, irrespective of the source of investment, as long as the startups give the declaration. Then we have also included listed companies, which have a net worth and turnover criteria and all that. So that is also exempt from 25 crore limit. AIF category 1 and non-resident investors were already exempted. So now we would like to bring in the legislation from IVCA to include AIF category 2 also.
And we also spoke to a few experts on this matter. Ravi Gururanjan, president of the TAI Bangalore, says that it's a very important framework and will take away burden from investors who are willing to invest in startups. Meanwhile, K. Ganesh, the founder of Growth Story, said that we have reached to a point that the framework is entrepreneur and startup friendly. Let's listen in to what they had to say.
This is a very important, framework that the government is going to set up. I think very important to set it up properly to accredit investors, in a organized framework. And IVCA has been pushing for this for some time, and we are very delighted to see this taken up. Obviously, on the larger angel tax issue, we would like to see as much of it removed as possible. But given that, I think the status quo is we're going to have some angel tax, I think this will take away some of the burden of people who want to make investments in startups, some of the burden that they will face by being able to accredit a single time, be able to give that accreditation to any startup they want to invest in, and then that startup can proceed without any risk to them.
They have removed the concept of fair market value valuation. They removed the concept of interministerial board approving the startup as a DAPP approved startup. They have removed the need for a merchant banker valuation certificate, an assessing officer to be convinced of the share premium. All that step by step has removed. We have come to a situation which is almost 99.99% entrepreneur and startup friendly. Irrespective of whether he's accredited investor or not, up to 25 crore can invest, no questions asked. All that I need to do is to get a DAPP registration.